Yo, welcome back, guys. Just a quick video. Um, yeah, I'm just gonna show you how to do. This is actually a swing trading video that. Oh, sorry, this is a swing trading strategy actually that I. Yo. What's going on, guys? Today I'm gonna show you a swing trading strategy that I learned from one of my guys actually. Yeah, been trading on and off for like the past 3 years, but finally found something that kind of fits my regime. Because obviously I work a 9 to 5 as well. So, oops, you guys weren't supposed to see that. Yeah, I work a 9 to 5 as well. So I kind of need something that allows me to still make money, in a way where I don't actually have to be on the markets 24/7, or even be on the markets, majority of the day, really and truly. So this strategy in itself, I mean, it allows me to check the markets maybe once every 4 hours, or even if I just want to check it every hour, I can do. It doesn't mean, I'm entering the charts every hour, but it just means that I can check the progress of it. Um, so I mean, it kind of works in my favor. It means I can get on with my day, and get on with my 9 to 5, and then every 4 hours, just check the market and see whether I need to enter, or just see how the market is playing. But that's it in a nutshell. So right now, there's a swing trading strategy that I'm going to show you, and yeah. So obviously, as you can tell here, this is literally, what day was this I entered? I entered this one on Tuesday, the 9th of May. Today is the Thursday, the 11th of May. So I actually got out yesterday, on the 10th of May. So yesterday, Wednesday. Um, I'll show you where I got out. Obviously, I'll show you guys the strategy in a sec as well. But basically, the negative 27, this red line over here, this would have been my target, as in my take profit target. So this is where I would have set my target, and once price hit this area, I mean, the trade would have closed itself. I actually got out around the end of this candle, so this red candle over here. I got out around here, and obviously I'll explain why in further detail. But yeah, as you can see, price has nearly actually got down to the negative 27. If I show you another trade, actually, same tactic. So this one didn't play out. This one didn't play out. This one also didn't play out. If I think it's GJ. If I show you GJ, okay, cool. Now this one played out exactly how I showed you on the very first trade that I just showed you, where I got out. So if you look at it, I basically got out just before the 0% mark, right? So if you look over here for GJ, again, I entered exactly at the bottom of this green candle, right? And I got out just by the 0%. The reason I got out just by the 0%, you have this candle over here where the green is, and you also have this candle over here where the green is. If you look at that and you know your market structure, technically speaking, this is a resistance zone. Depending on how you're looking at it, if you go down to the 1 hour, because that's the 4 hour. If you go down to the 1 hour, some people will mark this down as a. Some people mark it down like that and say this is a double top. Which, in fairness, it is a double top. As you can see, green candle closed above, but the next candle closed below. So essentially, double top. I mean, price is ready to go back down. So that's why I got out at the 0% mark. There's other reasons as well, but I can get onto that another day. But always the target is the negative 27%. That's always the target. So as you can see, price nearly got there, but I just got out at the 0%. I'm not too greedy. And reason why I got out there as well, as you can see, if I didn't get out and I held, you can see how the trade is literally, yeah, if I held, I would have basically been in profit by maybe, so right now I would have been aiming for 6K. So right now here where I got out, I think I got out at 4K. Again, I'll show you guys on MT4 as well. Got out at 4K. and yeah, I mean, if I held it, I would have lost 2K basically. So that's why I wasn't too greedy. I just got out at the 0% mark. It's just an easier way to do it. Now the strategy in itself, so obviously these pairs already paid out. So anything that's on active is already played out, or it's currently still playing out. So I'm not going to look at it again. Today's Thursday. We've still got a few days for the market to play out. Well, we've got today and tomorrow for the market to play out. Tomorrow's the last day. But I mean, what we can do is if I show you a random pair, let's just try something that's not consolidating or anything like that. Now, let's get rid of this. Sorry. Cool. Let's pick something over here. I'm just picking a random one, by the way. I just need to find it and I'll explain the strategy in a sec. Ooh, it's a bit tricky, isn't it? Okay, I think this is it actually here. Cool. So what we're gonna do is, where is this? Let's mark it down so I can see it. In fact, hold on, sorry. Just so I can see it on if I ever lose it. Okay, cool. So the strategy in itself, right? You want to see. So you want to start off on the daily, right? What you want to do is you actually want to see several candles going one way, right? So whether it's so you want to see several candles going one way, so 2 or more candles. It can even be 7 candles going down, but they need to be the same color, right? Once it's the same color, after that, so that's the continuation, right? So the whichever color is going, that's the sorry, the continuation, right? So right now, if you look at it, essentially what we broke structure over here, right? So we broke structure over here. Let's draw this one over here. Where are we? Cool. So we broke structure over here, right? Where this black line is, that's structure. So after this break, we are solely looking for what do you call it? So sorry, we're only solely looking for cells, right? So once you've identified that, you've got several candles going down. One, it literally, even if you see this one here, so from here, several candles going down, one candle as a retracement, right? And then after that, I mean, clearly the retracement, so the buying pressure wasn't that great because the next candle after that was a bearish um, candle with a lot of momentum, basically, right? So ignore this this green candle for now, but you can see 1, 2, 3 candles going down. The next candles after the after the continuation, which is obviously these 3 candles, you want to see 2 candles the opposite color pulling back in the opposite direction, right? So if we're going down, you want to see 2 or more candles going down, so 2 or more red candles basically, and then you want to see the retracement, which is the opposite candles going in the opposite direction, depending on if it's a buy or sell. Because this is a sell, you want to see 2 or more retracement candles going in the opposite direction. So green candles in this case, right? So now you can see 1, 2, 3. Now, when you do this, you're gonna have to have a fib setting exactly like this. So you've got 1, 0.88, all of these settings over here, right? Of course, you can remove the 0.618 if you want to. But really and truly, your zones you want to be focusing on is technically the 0.618 and the 0.27. Those are the 2 zones you kind of want to be focused on. So just set it exactly how I've got it here. And then what you want to do with this now is from the very top of the continuation, so the downtrend, which is literally from this top of this candle going down, right? But instead of putting your retracement from the top of this candle, pull it on the top of the previous candle. So the previous candle was before the downtrend is actually this green candle here. If this green candle was red, technically speaking, you do it on this candle up here, because you can see that this green candle is clearly smaller than this candle. This would have been the high basically. If this green candle was above this candle, then you would have basically put it on top of the green candle. But because this red candle is technically higher than this green candle, this is the high, and then you would have put it all the way from the high to the low. But in this case, because you've got this green candle that separates literally this move to this move, you want to start it from the top of that green candle. So that will be the high. Click it from there down to the low. So the low is obviously where the continuation or the downtrend stopped before several other candles. So the retracement candles started. So 1, 2, 3, right? Now a rule is once you see the retracements, you don't want once you see the retracements, you don't want several. You don't want big green candles basically eating away at the continuation candles. So you want to see them as small as possible. And majority of the times, 9 times out of 10, if you can, allow you can't really do anything about it, but you want these candles to basically, when you look at it, you don't want them to overtake the very last candle, right? And even if it does, you want to see a rejection just below, basically this, just below the high, right? So maybe if you see a candle going up, maybe let's say here, right? So where this horizontal line is, let me take this out. Let's see if you see a rejection going all the way up here. This is still fine because your high is up here, right? But let's just take this out. So from here to here, that's where you will mark your first one, right? Cool. Now once you've done that, you basically want to make sure that one of the candles, right, from the retracement has touched the 38.2. Once it has, you know you're in the clear, right? So next candle, obviously this green candle here, it's touched 38.2. This candle here hasn't done much, but it's still, you can see the retracement still going up because look, this candle is higher than this candle. This candle is still higher than this candle. And then what happens with this candle? It touches the 38.2 again. But you want to touch, you want basically what you do now is you want to move the top of this candle, the top of this fib to where the top candle of the retracement has touched the 38.2. So it wouldn't be this candle and it wouldn't be this candle. Even though this is the newest candle formed, this is actually the top candle of the retracement. So you want to place that top part over here, right? So technically speaking, it will be your fib will be drawn from, and I'll do it again, your fib will be drawn from here to here. The reason why it's drawn like that, drawing your fib from this high to this low measures your retracement, right? That's all it does. Now, if you drew your fib from your retracement down to the low, this measures your new expansion, right? So that's what we're doing. And then from there, now what we do is, this is a new strategy, we go down to the 4 hours, and technically speaking, we only ever use the daily and the 4 hour. We don't go down to the 1 hour, even though I have it there. We don't go down to the 4 hour. We use the dailies or 4 hours as the main time frames, and obviously the weekly and the monthly as well to identify structure. Now with this, after we've identified the touches on the 38.2 and the retracement candles, as I said, the retracement candles, you want to see 2 or more retracement candles. If you see 1, you can skip it. I mean, sometimes it will work, maybe like 6 out of 10 times it will work, but you know, there's still element of losses in that. So you want to make sure that it's 2. Those are mainly the ones that are more guaranteed. Even though nothing's guaranteed, it's more guaranteed than the ones that just have the 1. The ones that are even more guaranteed, again, you know, nothing's ever guaranteed. But if you had, I don't know, let's say 3 candles going down, and then the retracement candles going back up, it was 4. But the 4 candles going back up are much smaller and does not and it's not oversized or overtakes the candles going down, then you know you're good, right? So basically, your retracement candles, you want there to be more retracement candles and much smaller candles of the retracement candles compared to the actual continuation candles, right? And then that's how it works out. Now, after you've figured out the two touches from the 38.2 and the retracement candles, you know, you will never know when the retracement candle stops, but anytime you get um, two retracement candles and at least one touch of those candles from the 38.2, just mark your fibs. So that's why I've moved the fib from it was, so this would have been the high basically on the daily, right? So that's why I've moved it from here. So this would have been a high from the daily, this would have been a low from the daily, and then these candles would have been basically your two retracement candles, or sorry, the three retracement candles. Yeah. Now I got one touch from um, one of the retracement candles, and then I got a second touch. No, sorry, the second candle for retracement didn't touch, but then the third touch did touch, which is obviously this one over here. But because this one was the highest, that's the point I take, right? Remember that? So then just simply move it over here. If if another retracement candle was to be higher than this candle on the daily, if you remember, then you know you simply just adjust it. As long as the retracement candles does not surpass the top high or the the top candle or the high candle on the daily, then you know you're still in structure basically. If the candle decides to break above where you put the top of your fib, then technically speaking, you know, structure is done. Structure is not gonna go. It's not gonna go down because you're aiming for sales basically. So you know it's done. So basically after that, you know, you just leave it. There's nothing else you can do. You just move on. Now with this being said, as we continue the strategy from here to here, what we will now want to look for on the day on the 4 hour, we want to see it's basically a break and retest. So you want to see a break of the 61.8, which is this first red candle here, and the 0.88 is where you're going to put your stop loss. All right, so you want to see a break below the 61.8. You want to see a retest, and that's where we enter. We enter on the retest, and then we aim for the negative 27%. Now, of course, you can see, right, it's already touched it, right? So this will be from the top, right? So this candle from the top of the fib, rejected. Next candle, it literally closed below. And this here is the best example actually. When you see a break below the 61.8, but it does not close below the 50%, which is obviously the second line, the second red line. This is a great example. Sometimes it closes below the 61.8, but you know the candle itself closes all the way. Let me show you. That's a bit tricky. But let's just say here. Let's say this is all one red candle, right? Sometimes it will close all the way below here. It doesn't necessarily mean that it's not going to come back and retest the 61.8, but it's totally up to you whether you want to set your buy limits and sell limits for that retest. Sometimes once it closes over here and then retest, sometimes you get stopped out. But again, that's at your risk. Your best ones is to enter is if you get a close below the 61.8 and price does not close below the 38.2. You don't want to chase. You don't want to chase the market. Let it come to you. So I mean, it can close below. It can literally close below the 61.8. It can close below. That same candle can close below the 50, and you know have a rejection in between the 50 and the 38.2. That's fine. And then sometimes it can close literally below the 38.2. It can even close directly on the zero, and then come back to the 61.8 and still go back down to the 27. You just have to play it by ear. But the best ones are always when you know it doesn't close below the 50 and you still get a rejection because you know okay, there's a bit of market structure here. Now, you know we got that close there, and as I said, we enter on the retest. Now a tip is you can either exactly enter on the line of the 61.8. You can enter above, so you can get more for your buck, I guess. Or what you can do is, whenever you see, I'll show you here, whenever you see, so this is the 61.8 line. Now, whenever you see a rejection candle, right, within the 61.8, shortly below, enter from there. Because 9 times out of 10, that's where price comes back to hit. So sometimes price, what price will do, it would actually come back to, I don't know, let's say here, right? So obviously green means I've entered, and red is obviously, well, yeah, anything green is obviously profit, and anything red in this section here is, what do you call it? Is my losses, yeah. So sometimes price would actually enter here, for example. Oops. Sometimes price will enter exactly where this green dot is, right? And then sometimes price would actually enter where this green dot is. You see how if I entered here or anywhere in this level, I'd actually still be in negative for some time. But if I entered over here, I'd still be in negative, but I would have more money, basically. Does that make sense? But sometimes, you don't want to get the perfect entry. So what we do is, or what I suggest is just enter at any given point, either under 68, 61.8, or any given point where candle has rejected shortly after or below, depending if you're buying or selling. In this case, selling. So any areas of rejection just below the 61.8. So basically, I'd enter here, right? Literally just off of this rejection candle. And then from there, you can either put your stop loss on the 61.8, right? And then you want to aim for your negative 27. With this in itself, it's a 1 to 3, or 1 to 3.05, if that. Now, with this, as you can see, and I'll show you how long it took to play out completely, right? So basically, okay, cool. So here, so we, even though we entered on this rejection candle here, we didn't actually enter off of this. We waited for that break. So this candle here is the break. But I set my limit for this candle to be entered at this level. So if I just shift this over by 2, as you can see, this is where I entered on this green candle. But the limit was literally right on the on this rejection candle here, right? So technically speaking, if I entered from here, cool. And this is another thing here actually. You see how close we are from the top of this rejection candle to the stop loss. What, seven pips? I don't really look at pips because really and truly, wherever I enter, it's a 1 to 3 regardless. So one thing you want to do to save your ass, just either put price shortly above the 88. Same thing as I said about the entry. So you put it shortly above, right, or below, depending if you're buying or selling, and that saves your ass. Because sometimes what price will do, price will, let me get this candle. Price will literally do something like, why is it not working? Hold on. What price will do? Price will do something silly like this. I'm not sure if you guys can see this black candle, this black line is true. Price will do something as silly as that, all right? And if I had this stop loss here, you see how it would have been stopped out? So that's why I say put it shortly above. Because look, it was probably 2 pips away from stopping me out. I didn't get stopped out, all right? And I was still in. And then eventually, it hit take profit, which is obviously over here. Now, if you ever have to move your stop loss to about here, and this is where you want it because you want to feel safe, you can either leave your trade as a 2.6, but a better way to get that free 1 to 3, your entry, just change your entry. Even though I said enter at the wick of where any areas of wicks that you see by the 61.8. Okay, if you have to move your stop loss because you want to be risk averse, what you have to do, instead of moving your target, let's move your entry. So it was on a 2.6 if I'm correct, right? Okay, so now we just move our entry to what here? Let me shift this so long over here. So we still enter on that break and retest, right? And now this is a better entry because look how far the green candle actually went over. If I hover over the fib, look how far this green candle actually went over this red line over here, this red horizontal line over here. So we basically we still got the entry. So we still got the entry, right? And you know, if I get rid of that line that I drew for the stop loss, you can see price technically still close, but nowhere near, right? Still got it. We were in profit for what? I don't know. For the first 4 hours, we got in at, so this is at 10 o'clock. So we got in at 10 o'clock, right? And we saw, let's say we saw the close at 6 p.m. UK time, GMT. We got in at 10, or the price tagged us in at 10, no problem. 2 a.m. we're in crazy profit, probably in, I'll be able to tell you now. This would have been what? Depending on your account size, this would have been so if I had a 20k account, this would have been 250 240 pounds or dollars in profit already. Cool. Then you know we're in, you know, price starts retracing because this is overnight now, 2 a.m., 6 a.m. And you know it starts retracing for a couple of, I mean, what's that? That is a couple of days actually. So that's poor. So throughout Monday, from when we got the entry, actually no, sorry, we got the entry on Monday. No, did we get the entry on Monday? No, we got the entry on Sunday. See, now I wouldn't have even entered here because this is Sunday. Market basically just opened back up. So I would have let Sunday play out basically, right? And then throughout the day. So yeah, so Sunday when market opened, right, on a Sunday, never get in because market just plays out very, very silly. So just let market play out, and then depending on the time zones you want to trade. So usually, obviously, I trade London time zone, so it's either London and New York, which is most volatile. So what you want to do is let market play out. So between 10 and 6, so the next 4 hour candles basically, just don't get in. If price comes back anywhere near your 61.8 during that time, or sorry, after the time of market open, so between basically 10 and 6, right? If price is away from your entry, leave it. If it's close, then set your limit because clearly, you know, you're going in the right direction. So so basically, I wouldn't have even got in here. So I would have got in at, I would have seen it. So I would have got in at this 10 o'clock candle here, basically. So we would have got in here. So closed, it tagged us in, went down, it still tagged us in again. This is a second confirmation entry, by the way, right? For those that didn't get in the first time. And then it did it again over here. It closed again on Wednesday. So it closed on Friday at 6 p.m. But that's too late anyways to get back in. Market closes at 10. So who's going to trade that time? Sunday, no one really trades between 10 p.m. Open and 6 for London because, you know, London opens at 8 p.m. So no one really trades at that time. And obviously you have to let the market, you know, recalibrate itself. And then what? You know, from all of that, still allowed us entry on Monday, 10 o'clock, right? And then what candle is this? This is Wednesday, 6 a.m. I still would have got in again. Market closed back down, didn't stop us out. This gave us a third entry, right? For those who missed it, got back in. And for those that want to play the risky game, you can get in twice. You can get in literally. In fact, you can even get in 3 times. You could have got in after this candle if you don't know about letting the market recalibrate during the open time, right? And then you could have got in again over here, which is the more risk adverse option. And then sometimes you actually don't get a third option. So I mean, for the market to print a third option, that's great. This is it, third option, and then not third option, third chance. And then from here, got in again at this candle, Wednesday 10 a.m. So really and truly, after that, I mean, price just took off. So if we got in actually at, let's say we got in at Sunday, right? Market open up until when price actually hit our take profit. It took a week basically. Actually, no, not a week. It took 4 days and 16 hours, as you can see there, right here. 4 days, 16 hours, right? And right now, I don't really look at pips. So, because regardless, it's a 1 to 3. So no matter where I enter, it's a 1 to 3. And I'll show you guys a trick you can work out where it's literally a 1 to 3 regardless of your entry point, right? Which is obviously how I told you to adjust your levels with this tool over here, this short position tool over here. Excuse me. So obviously that was 4 days, 16 hours from Sunday. If we got in, 4 days, 16 hours from this candle. If we got in at the risk adverse option, which is obviously Monday, 10 a.m., right? Which is obviously when London is most active as well, from 8 to, from 8 up until like, I think 6 p.m., if I'm correct. So here, this would have taken us 4 days and 4 hours, right, to take profit. But depending on your account size, if this was a 20k account, you're risking 2k, right, which is your 1%. So all of this red is 2k. You're risking 2k to make 6k because it's a 1 to 3. Everything we do here is a 1 to 3. So what? It took you 4 days to make 6k basically. Simple, fairly easy, right? That's the 4k over here. Sorry, that's the 4 days, 4 hours over here. If we got in at the third time after this close, right? Let's just say from here. That took 2 days and 4 hours. You see that? So technically speaking, from the risk adverse option, which is the second choice, it took 2 days basically for the market to, obviously this is Monday, so technically speaking, you still have to let, market recalibrate itself still, even though it tries to do it on Sundays open. On Sundays, when it opens on at 10, technically what we have 2 hours up until 10 GMT, by the way, so that's London time. So then we only have 2 hours up until it's the next day basically, and then you have the whole of Monday, which the market uses to recalibrate itself. Sometimes the market moves in your favor on Monday, but some people actually just don't trade on Monday because of how the market tends to move. It will try and recalibrate itself and just completely move the wrong way, or it will just consolidate. As you can clearly see, this is a bunch of consolidation, or range if you want to call it. And consolidation is basically just when price is moving sideways and doesn't do anything. If I was to draw a box around this now, you can see price is literally just bouncing around. It's not doing anything. Rejections to both sides, to the upside and to the downside. But in a nutshell, that's it. And yeah, reason I always try and get out at the 0% mark, depending on how much I've made, or depending on how the move, the strategy looks, or the move looks, is just based on this candle. So you see how this red candle over here has touched the 0%, right? Some people, you need to understand, some people are looking at the market completely different to how you are. But all in all, you are all looking at the same thing, just at different times. So if I'm looking at this, right, I see this as, okay, no problem. I see a 0% mark, but I'm aiming for the 0.27. Sometimes, if you see this rejection, right, from this candle, I will see this as a double bottom. So what people will do from here, they will start buying, which is where you get the rejection. As you can see this clear rejection over here. You can see this clear rejection over here, right? So that's where the buying pressure is coming from. And then after that candle, what do you see? You see a rejection from the bottom side of this support area here, right? And I always just tend to get out here because sometimes price can literally just go from here and shoot off in a complete opposite direction. So if I hold for too much, I would have been up 4k basically, and then I would have lost 2k because I decided to hold for too long. So you can never be too greedy. If you really want to aim for that 0.27, totally up to you, right? But again, this would have been a support area to some people, so some people will still buy. But if you look at your charts, you can clearly see this is structure over here. So what do people do? Even though you got support over here, buyers try to push up, sellers wasn't having it, and this is where you've got the pin bar, or a reverse hammer, depending on how you want to call these things. And yeah, this is a lot of selling pressure. there's more wicks to the upper body down compared to the bottom half. That's selling pressure. So you could, after this candle, you can clearly stay in and just say, do you know what, I'm gonna hold because this is a lot of selling pressure. After that candle, what happened? Price went smack down, hit TP. Simple, simple, fairly simple. Now, with that being said, let me just get rid of this. You can look at that and say, okay, do you know what? Cool. You want to find, let me put this magnet back on. You want to find structure, okay? This would have been a support area, right? Give me a second. Where's it working? Come on. This would have been another resistance area, right? Okay, cool. But you can clearly see prices bouncing around all over the place in this area, right? Okay. And then what happens? It breaks out and then forms a what do you call this thing? It forms a retracement, well, a series of retracement candles. So what you want to do with this, find another support area or resistance area. But you want to find areas of resistance turned support or support turned resistance. Those are probably the stronger ones, rather than finding support and resistance areas. So if I was to find something like this, for example, this is just a resistance area. Doesn't actually mean anything for now based on the strategy, because I mean, this is the ceiling. And you know, this is technically the floor. Now this section would have been the floor if price hadn't actually broke it. You understand? So this would have been the floor. You would have said, okay, this is a support. Basically, we're just gonna buy. But that's only if you want to trade support and resistance. This technically uses support and resistance to find structure, and you want to get in on the break and retest. So use that to your advantage. Now, if I saw after that consolidation prices came down, I want to see after the consolidation price either continue, come back down into the consolidation box, or you know, price break out and then also break structure or form structure, right? So again, consolidating in this area, broke down, and then this is the support area, broke down that as well, started retracing back into the support area. So support turned resistance, as I said, and resistance turned support. So if I was to flip this, let me, give me a second. If I was to flip this, how do you flip it again? Oh no, I remember now actually. If I was to invert, there we go. If I was to flip this, right? So we're still looking at this area over here. Resistance. So resistance is obviously ceiling. So resistance turned support, and it was resistance because this is where it rejected. So ignore the green and red candles. Obviously, I've flipped it. So red now means buys and greens means sells. So resistance, right? As you can see, price doesn't want to break. Ignore everything on the right hand side, by the way. Yeah, ignore this. But look here, sells, buys, resistance. So there's not much buying pressure. The sellers aren't allowing the buyers to win, basically. So you know, it's just bouncing around in this area. Support over here again doesn't mean anything to us, but again, we're looking for support turn resistance and resistance turn support. So what happens after this? Price basically comes back to this area, buying pressure, up, 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 right? Breaks past it, and then comes back into the same box, right? And then from here, what? We're still doing the same thing basically. So it would be from here, from the bottom to the top. And we get those touches from the 38.2. One touch, remember? But, so you want one touch, but at least 2 or 3 retracement candles. We already got that. And then what do we do? From the highest point or the lowest point, depending on if you're buying or selling, of that retracement candle and the candle that touched the 38.2, that's where you move the top and the bottom of the fibs to. And then from there, the rest is history. Let me redo this. I've just confused myself. Invert scale. There we go. Cool. As I said, resistance turns to support and support turns to resistance. That's how we do it. Now, if I show you, let me just get up my. I'm gonna put it up on the screen now. I'm gonna put it up on the screen now, as you can see. This is a 200k account, right? And in the last 7 trading days, and that doesn't mean 7 days exactly. That's 7 trading days. So the market's only open Monday to Friday, so that's 5 days in itself, and then another Monday and Tuesday. So within the last 7 trading days, it's 13k, right? And this is all the same strategy. This is all the same strategy, as you can clearly see. Let me open up. Actually, no, we don't need to open that up. That's fine. But yeah, as I said, this is within all. This is the same thing. It's literally the same thing. As you can see, 5k over here, and there's a few losses. However, if you look at the losses, they are no more than 2k. Some of them are even 250 pounds. 1.5. This one is less than 1k. Sometimes you just know when to get out. Cut your losses short. So what you want to do is, with all of these things, once you get your entry, if you see that price is clearly not in profit the very same day that you enter, and you've entered after the break and retest, right? Just get out. There's no need to hold that trade. Just get out. And if price wants to, exactly how I showed you on the example on the charts, if price wants to give you a second entry, it will do so. But that's your job to look at it and find out whether there's a second entry or not. No point in holding it, because this is less than £1,000 that I lost. So instead of me losing the whole 2k, that's an extra £1,000 in that account that is not going to waste. So just cut your losses short as soon as where you can. This one was 1.5. I could have cut that one shorter, but I just left it. And then this week itself, today's what, the Thursday 11th. This week in itself was a crazy week. I can show you. Let me show you gold. Gold, as you can see, we did 3.3k. Let me show you how gold looked. And I got out again at the 0%, 0.3. Actually, I got out just before the 0.0%. Just because there was news. There was, as you can see on the screen. Actually, no, this is 12th of May, so this is coming tomorrow. But as you can see, huge news spike again. Obviously I didn't get in at the break and retest. I actually got in lower. That was more of a risky move, and I'll show you guys how to do that in another time. But I mean, the more conservative way is the break and retest of the 61.8, and as you can see, the price actually broke with this candle, retest with this candle, but it was a deep retest as well, because the price came all the way down here. So if you had entered here, basically it would have been a drawdown all the way over here, and then again broke again with this candle, retest again, retest, and then went took off, and then yeah, same thing, came and retest again over here. Let me get rid of this thing. Came and retest over here. In fact, came and retest over here, came and retest over here, still went up. Another retest, still went up again. But then now, price is just coming all the way back down. So that's why I got out after that news. It just took off. So I was good after the news, really and truly. Once there's a huge news spike or huge news that's out, and then there's a huge news spike, price usually comes back down to retest itself. So you want to kind of get out, what I would say, no more than 30 minutes after that news. You don't want to hold that trade. If you can get out 10 minutes after, great. 20 minutes, it's still technically going up. 30 minutes or more, it's coming back down to recalibrate itself. So that's just something to be mindful of. And again, so basically, reason I got in entry over here at the bottom over here instead of up here. Price broke above this section here, above the 61.8 at 10 a.m. Retest was at 2 p.m. 6 p.m. I could still see price coming back down. I was probably busy at work, so I didn't even see it. But if we get rid of this blue candle, let me move this here. So basically, I saw price at this level over here, which is all the way down over here. So I saw this and I said, you know what? I'm just gonna take the risk. I bought here. Still put my stop loss below the 88, right? And I still aimed for the 27. If I had got the 27, that would have been 8k that I would have won. But you know, it was a good 3.3k. I got out, as I said, after the news, so you know, happy with that. That's the same strategy. What else did I do? I did the USD CHF, which is over here. And this one played. Yeah, you see how this one was just being silly. Um, so this is the break. This bearish candle here. This bearish red candle is the break. The retest was here, came back down. You know, was in profit all Monday, Tuesday drawdown, Wednesday it just came back down, did a retest. Literally, this let me get rid of this candle. Did a huge retest on Wednesday. Again, this is news. This is US news. Basically, did a huge retest and came back down. And as I said, yeah, just got out at the 38.2. Literally no more than 30 minutes after that news. After I saw the news, got back out. Why? Because look, price is resetting itself. This candle back up, back up, back up. So basically, you know, if I stayed in, I would have basically got stopped out. Basically, this would have been a 2k loss. So you just know. The other one, GBP USD, which was a good 4k. This one I got in much earlier, and reason why I got out at the with this one I got out at the 0% mark, but I got out, you know, shortly, not long after, no more than 30 minutes after the news, and I'll tell you why. Because look, I got in at okay, cool. So I saw this. I got in at here. So I just took a risky move with this one. I didn't even wait for the break. I just said, you know what? Because of the way structure is formed right now, if I remove this candle here, um, yeah. So right now, if you look at price now, clearly uptrend, right? That structure, uptrend, 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 uptrend. We broke above the recent high, right? And the strategy in itself played out. So I said, okay, cool. Where are we now? Ignore this advert. I said, where are we now? And I said, okay, cool. We've got this the bottom of the fib. That candle itself is rejecting off the 61.8 here, right? So I didn't wait for this candle to play out. I could have, because I would have entered basically a day later. But I said, you know what? I'm just gonna do what I need to do, and I did just that. So I got in much earlier, right? I got in what here, just below, right? And it played out still. If you see this candle here, this candle over here, Wednesday, 1 p.m. That's when news took off, as you can see, right? So I was in profit for a little bit, for like, maybe 12 hours, drawdown for 2 hours, if that, and then from there took off, right, within that same hour. And after that same hour, I said, you know what, I'm gonna get out. But luckily, because of the way market was set up, price literally took me all the way to the 0%, and I got out at the 0%, or I think I got out just below the 0%, because after touching the double top, which is obviously over here, right, price could have easily rejected with that same candle. It could have easily rejected with that same candle. So, but it didn't. It broke above, and the next candle it broke below. And what did price come and do? Came back to reset itself and stopped everybody out. Simple. But that is the strategy in itself, guys. I'll try and do a shorter video, because I know this is a long video, but I'll try and do a shorter video next time, and just explaining the strategy in itself. This one was basically just this one did explain the strategy in itself, but I just tried to do it in full, and just explain my reasoning for certain things. There's some other ways you can get into the strategy yeah, there's other ways you can get into the strategy, whilst knowing. There's other ways you can get into the strategy. Um, sometimes the candle itself doesn't, the color of the candle sometimes doesn't actually form the way it's supposed to, but price will still play out in this exact same direction that you want it to go in. So if you're looking for buyers, price sometimes doesn't actually form the exact candles you need, but it would still hit your take profit. So there's other ways you can do that. But yeah, that's gonna come out in another video. So bearing in mind this strategy in itself works for currency, it works for crypto, and it works for stocks as well. Anything you can really get your hands on. But oh, and indices, as you can see, I've got gold. Well, I showed you gold. I've got oil, US 30, NAS 100, S&P 500, all of that jazz. Literally anything you want, it will. Anything that's got market cycle, it will work. 9 times out of 10. So this is a great swing trading strategy. You don't have to be on the market 24/7. Every 4 hours, you can check it. If price is playing the way that it needs to, then set your alerts and you just enter and let history do the rest. It might take a few days to obviously hit TP, but that's up to you if you want it to hit TP. You don't have to, as you can actually just take a good. Obviously, we're aiming for 6K, so you can easily take a good 4K at the 0% mark, or just where you think market is actually rejecting, because you can still get in and take a good 2K. Price doesn't always have to get to your TP. Price will do whatever it wants to, and that's your job to identify that. And yeah, if you guys have any questions, feel free to message me. Instagram below, Snapchat's below, Telegram. There's a Telegram and Discord group below as well. But that's it in a nutshell. Yeah, if you guys have any questions, let me know. All right, peace.